Everybody, welcome in. Take a look at Bitcoin today. Somebody just asked a question about the bear market, and I'm going to kind of go over an idea about that, right? So let's take a peek at that. Bitcoin's actually acting pretty wild right now. Not too wild, but we're getting some movement at least right now live, so that's always fun when we're here in the morning time. Just kind of going over the scenario, which we've been watching unfold for a few weeks now. We've been watching this range since January 5th, right? We've cycled it almost 3 times at this point. Came in at January 5th here, cycled it to the range low, came in, took out our volume target down here that we were looking for since the $52,000 Christmas time high, right? This was our, I just reorganized all this today. That's not good. This was our doomsday. Jeez, okay. These were our 2 volume targets down here that we were looking for, right? One of them being 33,500, came down and actually tagged just $500 below that, ran it back. Looking to regain these levels, right? As we were down here, we did, came up, basically tagged the range high, cycled it all the way back down to the range low once again, and we were anticipating we may see this this other volume target hit, this untapped NPOC. Usually we don't see these get left untapped, especially when we're this close to it. So it does make me a little nervous in the sense, or just in general, just something to kind of be aware of if we do end up running it back up towards anything substantial, 50, 60K, anything like that, because we may end up just doing what we just did and run it up to there again and then come back down and fill out some of these areas down here. Regardless, that was one of our major targets here, about $32,000, and like I said, it missed it by 6%, give or take, right? So big opportunities there, and you don't really, when you have some of these plans in place, you just depending on how you're doing it, if you're looking to DCA or if you had some dry powder on the side just in general and you want to get in or whatever, we're looking at Bitcoin obviously right now, but this kind of transpires over to the altcoins as well. If Bitcoin's coming into these lows, obviously the altcoins are at their lows too. But if you are waiting only for that one target specifically, right, you risk, if you entered it, at this low, for example, you're 6% away, and if you were entering here, you risk losing 6%, I guess, right off the rip, if we continue down, double that for altcoins. But the risk to reward, as far this is a spot trade, right? This is not talking leverage. The risk to reward is, a double-edged sword because of this move, right? Or these moves, even just the run up back to where we were basically is a 10% move. That you missed out on here. So either way, you kind of miss a little bit of the boat in that sense, right? And then then you gotta quickly now decide what do you want to do. Are you gonna try and wait for it to go back down? What's your next validation points? And it's a big rush around that time frame. But regardless, just kind of going over this range. I guess I'm getting off target here. Was pointing out that that's why we were looking at 32,000. That's the reason why, right? So, anyways, came back up. Re-entered the range, held the range low. This was our weekly pivot right here. So on Monday, we tagged that really quickly before we started blasting up, right? So that was our weekly pivot right there. Back tested that, back in, held the range low. Away we go. Took out this 2-year key level right here. And we just pretty much rallied it all the way up. You guys know the rest there. And then basically, right, we were nowhere that we weren't already 2 weeks ago. We were just back at the range high once again. And you look for the reaction, right? You look for at least some closure. You're looking for 4-hour candles close. You're looking for a daily close, something. We got a wick and just right back down. So technically, you'd be expecting to cycle through the whole range again, right? Back to the range low. So that's very possible. For me, I would anticipate that we may actually end up breaking this range to the upside here. But either way, prepared for both, right? So, and that's the name of the game, right? We can be leaning one way. You could be anticipating one thing or another. And just kind of have your strategy and your orders in play here as things unfold, because does this break to the downside, hit this, and then just go back to range low? Totally could. You'd still be putting in a higher low, right? We got higher lows now across the board. You got our low, we got our higher low, coming in, tag the range low once again, 38K. That'd be a higher low. I just don't necessarily know if we're going to get that low this time. Once again, the levels that we wanted to stay above are this box right here, right? This is our get back above, stay above box. And this is essentially that 2-year key level, and what it really is. And actually zooming into this, look at where we're coming at, right? So this is what this is right here. This is our range low for the entire year, last year, right? So last year's entire range from basically this area up towards 64K, right? So think about that in a sense of almost like what we did here, right? Where we re-entered the range, right? You hold your low, and then essentially away you go, right? That's the idea. Obviously, you got a lot of resistance in the way. We're punching through it now anyway, so in theory, you want to hold that as your range low, and then you start taking up. But regardless, this is the area you want to stay above. Realistically, that 2-year key level really comes in as that major support right now. This is a good, in my opinion, if you're looking at DCA, if you missed this run up here, right, and you were looking for that pullback, I mean, here we are. It's been like 12%. Yeah. Not terrible. As far as upside continuation, I mean, this still really, obviously we can move from here back up to the range high, and that's a decent move in its own, about 10%. But to continue upward, we really need to break this range high, about 44,900, and like I said, on a closing basis. So you really are looking for that the 4-hour to a daily candle close above there. From there, we'll start looking up to that next range. Right, our next range low, right, comes in right here, about 45.8, right? So we re-enter that. Then we got a natural target above us of the point of control, right, about 49K. And then after that, you got the range high, about $50,000. But that none of that gets activated until we actually break the current range that we're in right now. So Crypto Glenn, indeed, big buy. So yeah, let's see how this one unfolds. Like I said, this is, let me see if I got that pulled up still. Yeah, right there's the golden pocket. So you're essentially, maybe we'll come down and tag it. 40,013, right? It came to 4350-ish. Right, and that's from here to here. And then if you're going to pull from that low all the way to the high up here, technically, I guess you got a golden pocket right down there at the range low. So something to consider there. But regardless, this is also the 0.5 right here. Well, you can't see it, but you can see it kind of coming through there, right? So you got 0.5 of the major move. You got 0.6, the golden pocket right there as well, and the bigger situation is the 2-year key level. So that's a high time frame average of price that's gonna more than likely come in at least as some support for a hot minute. You can see even just like looking back on how we've kind of come into contact with this a couple times here. But we really want to stay living above that, right? That's our go-go juice, so to speak, right? We want to be living above that 2-year average there. Is this range cycle almost over? So I mean, it can go on. I mean, it's not necessarily time to. If you're in the Discord group, I mean, we have some fib times coming up that we have a lot of interest around in actually the next couple weeks here. So I would imagine that maybe in the next week or so we get a reaction here. So we'll find out. But yeah, I mean, it's super simple. I mean, right now, looking at this just without a range in general, just as far as market structure, right? We got a 30% run up over the course of a day or two. It was the 24th. I guess that was the real run up really shot straight to here. So it was about 4 days, I guess. This one push, I guess, is just more relevant because it was all in one day. But you had a 31% move. That's a big impulse for an asset that's almost $1 trillion. So generally, you tend to get a pullback at least to the 0.5, right? And then the 0.618 is really a big key area to see that pullback too. So in general, this is just a normal pullback after a major impulse of this nature, right? I just don't, not that I'm betting on this by any means and just being like, don't wait for these levels here or anything like that. But just if you're looking to DCA, just like Glenn just said, right? Like, you're looking to sprinkle some in, dip your toes in the water, so to speak. This is that time. A lot of people are scared right now, right? We get back, we're touching on that psychological number once again, 40K. And then this is what I love about the 2-year key level right here is that it's under 40K, just under. So every time we come around here, it gets, depending on where we are, obviously, it gets people really nervous because, you break that psychological number that everybody just builds in their head, that means anything, right? Like 40K doesn't mean anything. This $300, $220 level below it does, right? This $1,100 level above it does. 40K is nothing aside from just a big rounded number. So to answer your question about the range cycle, if this is about to end or anything, like I said, it just it is just that, right? It cycles through, it oscillates through. We've come up and hit this range, both of them actually, range high and range low, quite a few times. So I would imagine we're at some point here about to resolve this one way or the other. So it's just kind of a time to be paying attention. If you're looking at anything like order flow and open interest, that kind of can lead to some more. Lead you to some more conclusions there, so it's a little bit less guessing. It's you're watching actual open orders come in, right, which is pretty interesting. But yeah, that's pretty much Bitcoin. We've been covering this so often, and there's only 60 people in here right now, so I know most of you are in the group. For whatever reason, twice a week, my live streams, I feel like they get the old shadow. You know what I'm saying? But that's fine. But yeah, so we're really just watching, for the reaction right here. When's that? 35 minutes this candle closes. So, if we close below this, it's likely then we're probably going to go down to this 2-year key level. We got 35 minutes to see what the deal is. But if we scoot up and close back above here, then yeah, this is probably just about as similar as this, right? Because so many people are trying to long right here, I guarantee. And you just keep getting stopped out, right? Because this is just such a big range anyways. Realistically, the only place you could true and blue put a great stop loss below is honestly all the way back down here. Realistically, I guess right down here, so below 37K. So if you're trying to long from anywhere in the middle, and this is why we talk about not diddling in the middle, because it's tough. Trying to catch longs was down here, right? This was the best area because you can put stop loss pretty well, and taking shorts would be the range high. You just want to make sure you kind of dress this your short, right? So or your stop loss. And this is the thing: most people didn't take the short at the range high, right? You probably waited till we got rejected, came back down a little bit, and then you put your stop loss up here, and then that's what happens, right? You get taken out real quick. And then for the most part too, a lot of people won't be able to put their stop loss too far away because they're not really shorting from this level here. They're probably getting a short late. And then vice versa here, more people probably went to go long because we were holding this level pretty well yesterday for about 12 hours or so, and probably trying to long in this region and then take that meltdown. So it's just a game of back and forth, and these ranges tear everybody up because if you don't catch it right at the low or right at the high, and that's really the only two areas that you want to be getting involved around. Everything else is just take profit targets as far as leverage trading would go, right? Or just trading in general, like it does not have to be leverage. If you're going to be shorting, you have to use leverage, the contract for that. But yeah, so it'd be interesting to see how this 4-hour candle closes. Like I said, we got 33 minutes. We're within 2% of the 2-year key level. So, realistically, that's, a great opportunity coming into that. And it does make a lot of sense, right? Like I said, this is the golden pocket, your 0.5, your 2-year key level. And this is our major 2-year average of price as support. And to come back down and back test that and away we go, that would be a good sign. So you'd want to kind of pay attention to see how price reacts at this level. And then at the end of the day, right, we still do, when you're looking at this, like the idea really is we got rejected at the range high. We just lost the point of control. Realistically, your target would be this range low. So worst case scenario in the short term, we head back down to 38K. Somebody had mentioned that in here earlier, right? I just don't know if we're going to make it there, But that's literally just a thought, right? So this is the facts of what you want to look for. And this is what we're dealing with, right? So it's just, yeah, I think, and if we do make it down here, it's going to be quite the opposite. It's vice versa, right? Everybody that was waiting for 38 or waiting for 40, there'll probably be some bad news comes out around here, and then everybody's going to think we're going back down to 30. You know how the game gets played here, so everybody gets really fearful here. Everybody says they want to buy 38, they won't buy it. They'll buy it back at the range high. Anyway, so that's pretty much Bitcoin right there, right? So, and then we're going to talk about that was me longing at 43. Hey, at least you admit it, right? I mean, this is the thing, because how much time did we spend up here? And what happens is when we spend a lot of time in an area for a minute, this is what happens, is that everybody overanalyzes what just happened. It's just like, oh man, Bitcoin just ripped. It's probably going to run back again. And then you start going through everybody's ideas, right? Going through all of the social media platforms, or you start watching YouTube videos, or you start whatever the thing is, right? You just fill your time with trying to figure out, what is possible. And, then you start thinking, okay, like, we're sitting here, we're holding this area. Maybe I watched CVO and he's talking about the monthly open and the quarterly key levels and major support. We could totally turn around right here. And you could have, right? This was a good support area that you could see. And realistically, though, I'm not getting too crazy until we break this range high. But does that mean now it's like don't get involved at all? Well, no. Like now you switch it over to your longer term portfolio, your long term holds, and just like Glenn said, right? Like this is where you scale it in, man. If we drop it all the way down to 38K, that'd be great. But I mean, this area is good enough for me, right? I'm happy with dropping it back to 40K again. And only being 1.64% away from one of my major areas of interest. And then if we do get to the range low, then whatever, right? Like, if you're going to even enter with whatever, obviously you don't always want to be completely all in, but I know that sounds cliche and most people are. So if you're planning on doing anything, and if you got in right here, well, you might go 5% underwater for a minute, right? At worst case. And then if we start breaking below here, well, then you got to change your strategy anyway. So it's either sit on your hands on the sidelines and do nothing, or have a strategy and be ready to play. Man, every time I go over my little bear market idea, there's never anybody watching, so it's always it goes on some deaf ears almost, which is funny. So you guys are going to get some VIP here. We'll keep it a secret from everybody else. What point on the fib is that 40? I'm not looking at my chart. What point on the fib is that 40? The 40, like this 2-year key level? I'm assuming that's what you mean, my friend. I mean, that's the golden pocket. Well, it's one of two things. It's 0.5 from the 34 low to the 45 high. So that's the 0.5 there is the 40. I know this, I pulled this up for no reason, but and then it's the golden pocket from our Monday low, that 37,000 to 45. So right here is kind of triple stacked with an area, right? Yeah. That art guy, how you doing? Can I look at ETH? Yeah, we can look at ETH real quick. People, yeah, no, for sure. I love it, man. I'll come on here either way. It's just always interesting to see. It's like I don't post a lot of videos right now because I don't know. They just sometimes I don't know about anybody else. It takes like an hour, I feel like, to make a 3-minute video. So I would just rather come on and be live and just talk it out for an hour and then kind of go back to it, because it's like I feel like I spend so much time making a 3-minute video, and yeah, it's when I could just come on here and take some questions, kind of look around, and I try to come on when the actual price action is moving, because that's always fun. I haven't actually been doing that on purpose recently. It's just Bitcoin's just been so good over the last week and a half. All right, somebody asked for ETH. We'll do ETH real quick, and then I'm going to run through this huge range idea, right? Since there's only a couple of us in here anyway, so we'll keep it a secret here, right? So good old ETH. Man, ETH really doesn't have anything. Well, let me see. We might be coming all the way back to the point of control down here, like $2,600. Well, it's only $76 away. But But yeah, I mean, for ETH the other day, we basically based off the range low over here. This was what was that, Monday? 24th. So I think that's actually when we dropped down to with Bitcoin, ran it back, right? You got our 2-year key level coming in here for ETH, right? Comes up, tags that perfectly, comes back down. Had a support box here. It's pretty much a golden pocket realistically. We had our weekly pivot, that support box, right? And golden pocket all stacked up right here. So this is where we were looking to kind of pick some more ETH up. Ran it back so far. Looking for that range high. We didn't even come up to it, which is interesting. And then ever since, obviously, when you get, you kind of almost have to have a separate screen just watching Bitcoin, right? Just like, anybody watching stocks, if you're watching like the Dow or whatever, you got to have like your separate, or the dollar, whatever you're watching, that's kind of like that bigger mover. But generally these things all cycle together and move, to the same levels at the same time. But this is an interesting view right here, right? So we came through, we lost our monthly level, our monthly open, lost our 2-year key level, and just came back down, back tested this monthly, and we're heading down. So I would say that the point of control is probably where we're going to land, which is about 2614, which isn't too much further away from where we are. And then we got that. This is actually the previous range point of control down here at 2450, and then we got our range low. So those would be the areas I'd be watching right now. I don't think there's really much in between where we are right this second. And unless Bitcoin really turns around, ETH might have another little minute drop here, 2%, nothing crazy. For ETH, as far as the upside though, right? I'm bringing these up. Obviously, I know everybody's, things will never go back up when we're falling, but this is obviously the times, right? When you prepare for the upside, because you get these drops and what comes next. You get these drops, what comes next. So it's not all about just looking down while you're going down. You know what to pay attention for. But as far as to anticipate upside, right? So say we get this turnaround. Let's look at some fibs on ETH here too. We got the total golden. Well, that's why I put that support box there originally, but that was from the smaller move. But from the total drop down to the high right here, we got a golden pocket basically lining up too. Right with that point of control, so that just gives a little bit more weight there. Probably put on a regular. Come on. And right now you're coming into your 0.5 on ETH, so that's the only thing I would say that's going to possibly support it where it's at right now, is that it is hitting the 0.5 on there. So. Between here and the point of control, which is the golden pocket too. I mean, this is stacked right here. That would be my next major area to look for. But we could turn around right here. We are coming in at 0.5, so that's a decent area of support too. So once again, in the sense of like, either if you're just paying attention to the market or if you're looking at DCA, I mean, these are areas of interest, right? That should be interesting you, not scaring you. And then we turn this around. We get to this range high, still the target, and you see how it's double stacked up here too, right? We got two areas just stacked right on top of each other. So I always love to see, some confluence there. You got a yearly key level range high right there. You break through that, and it's not much between us and 4K. 4K, in my opinion, as soon as that $3,200 is really reclaimed, held above, a daily candle held above, right? We're pretty much looking up to almost 4K, right? You got this yearly open in the way. You got a golden pocket from the entire move down from almost 5,000 to 2,000, and you got your December NPOC, which is a major volume target. Let's take a look at Biddy. Biddy looks like is it moving up or down? I can't remember where we were at a second ago. We're almost at 41 again. Yeah, so. All right, let's go over my little bear market idea, right? Is it ever really enough screens? Yeah, no. I was thinking I would be golden, thinking we close the 50 continuation, we might be flipping. That art guy. I'm glad you're enjoying it. All right, so let's talk about this idea I have, right? And I've been going through, what's it called? First off, obviously, like, I'll always admit I was a huge advocator of end of the year last year, 4-year cycle, blow off top BS, right? But I also had invalidation points for when I would realize that that wouldn't be fulfilled. December 1st came out, made a video. I was like, hey, this isn't going to work out. Bitcoin was still at 60K. Obviously, all those targets we had, all those things, like those, all based on a speculative $200,000 Bitcoin, which I do anticipate still reaching one day, obviously. But how are we going to get there, right? So, and then the one thing that I've always found interesting is throughout this, and I started crypto. I got into crypto January 2017. Litecoin was my first coin. A big into all the 2017 projects, right? Trons and like XRPs and all this stuff, right? And have evolved from there, of course. And where was I going with that? Oh, the number one thing that I've always found just so interesting this time around, and I know it's almost because of people like myself from 2017 that are like, oh, the bear market is so terrifying. The bear market sucked. We dropped 90%, and all your assets did this, and then you get a small pump, and then you get a dump, and all these things, right? All the things that everybody the horror stories. And so every step of the way, though, of this bull run, every pullback, and I mean every pullback, back even when we were just coming in at 40K, the first time back in last year, you were talking like every step of the way. Is this the bear market? Is the bull run done? Is this the bear market? Is the bull run done? You just kind of catch it over and over and over and over every single time, and it's just like at this point, I personally, like I said, going off of there was a couple theories there, right? The one was that off the halving cycle, that this cycle top would be around September, right? And I think BitBoy, or not just him, but I know he was a huge advocate of that, and that was kind of a major target area, right? September 28th, blah blah blah, and time came and went, obviously, and then really the next two major targets were. We're going to be December, right, for the 4-year theory cycle, for the 4-year cycle theory, and then the next one is now May of 2022, and you don't really hear it too much. It's not as I'm sure you will hear it when we start running it back here. We reclaim that yearly key level at 47,000. May is going to be talked about, right? And it's just interesting to see, because I really truly just believe that every person, in the sense of like these long, maybe one person somewhere will be right, I guess, but you got like Blockchain Backer, this guy who's been like really just pulling just sheer fibs, which nothing wrong with that at all, but like, just kind of going off of the same thing. He's still kind of like comparing these previous cycles and years and this and that. I mean, at this point, to me, once we crossed December, really once we crossed January of this year, and we weren't blow off top scenario, in my opinion, I feel like you had to reevaluate. You can't just keep going off of this idea, but whatever, that's me. At least I reevaluated, I adjusted, I moved, and we've been making some great moves here. But it's interesting because you still have this whole, I don't know, I just think everybody will be wrong to some degree as far as those major projections, right? So whether you want to call it a prediction or not, it's a projection, right? People are looking for this, that, everybody's trying to nail the peak. If anybody on Twitter with a huge account at that is talking about it, odds are, I think that we have to realize that that's not going to be how it plays out, right? So this is an idea I have, and let's run it through. Oh yeah, this is the one with the range already pulled up. Sweet. Okay. Let me just hide this piece. Not for no reason, just to kind of keep it clean. So this is 2018. Right, so this is the bear market, so to speak. This was 2018 January through 2020 October. So as we can see here, right, it looks pretty much like a huge range, right? So this is the one thing that I've been kind of implementing into my strategy are these ranges, points of controls, key levels, things of that nature, and then I'll still pair it up with if you got an inverse head and shoulders, if you have any of these things, but it's just kind of adding more context wrapped around whether or not something could play out, should play out, or really what to look for the invalidation points, just like the inverse head and shoulders from a few weeks back. right? When everybody was looking for around 46K. What we were really, where we got rejected at, where we turned around, was right at the range high. That's really all that happened, right? We got rejected at the range high and down we went. But there was a huge inverse head and shoulders right next to it. I was making everybody really, anticipate that was going to come. But the validation for that to be true was that you needed to wait till the neckline was broken. That neckline just so happened to line up with the range high. So either way, that was two, in my opinion, that would have been two great points to identify, being like, yeah, we're probably going up. And that did not happen. We got the rejection, and then there we went. So one thing that happened here in Bitcoin's history, right? And let me throw this maybe in log, see if we can. One thing that kind of changed the game that I know everybody kind of talks about it and what have you, but I think it's really, really relevant now, right? So I'm just going to take a look at this previous. I'm really trying to squeeze this in a TikTok here for you guys. I'm sorry. Maybe if I go out to a weekly or something. All right, I guess that's a little bit better. So in this sense, right, you see the 2013 or whatever, 2013, and then we just kind of bottomed it out, right? Whatever of this area you could consider being the bear market, pretty much just the downtrend, maybe, who knows. But you see how we just kind of pretty much just rounded it off, right? You just had this round run. Well, here's where things get different, right? Now we got more of this like range style, and even if you actually like pulled this as a larger range here, the reason I have this here because this is actually based off the volume, but regardless, you can see this really clearly, right? We had a range low, had a range high, back to the range low, back to the range high, and very similar to how I was just showing you earlier. I mean, like at some point, this range is going to resolve one way or the other. You don't know which way, obviously. You can lean with, you can build context clues and kind of have an idea, but that's pretty much where, how we spent our 2018, 2019, and I guess this is 2020. And this, I don't know who and where you would consider this as all the bear market. I know a lot of people, and this is what I'm really getting at, is that there's no defining metric or way for crypto or Bitcoin to be considered a bear market, right? Like we've only really had two. And then also like what does it constitute? Like how and when? Because if it's crossing moving averages, well, we beat the shit out of these moving averages all year last year, right? Last summer we crossed through there and whatever. So anyways, this is the idea I have, right? What changed in this market drastically, right? And what day did it happen? And to me, it was this day right here, and not because it's the cycle top, because this is the day, December whatever, 7th, 12th, 18th, whatever it was. This is the day that the CME futures added Bitcoin to allow institutions basically to get involved in crypto, right? Before that, and my personal belief is that these institutions definitely have been picking up crypto for a long time. But as far as to like actually, actively utilize, as far as longs and shorts and all this and all that, and building contracts off of it, this was when the big boys came in, and the big boys trade like this, right? This is how the institutions trade. When you think of everybody saying, manipulation and this and this and this, it's just kind of almost goes back to that idea what I was just looking at, where it's like they know what the average investor looks for, right? And it's inverse head and shoulders and falling wedges and this and that, right? So they trade in these ranges, right? And then at times they'll line up with other patterns here. Like for this one, for example, maybe you could look at this as an inverse head and shoulders, but it's, at the end of the day, this was really just the range high. So there's confluence here with the range coming through. We're going to break it, and then you have your target, whatever. And it's very, very similar to, when you see a lot of these patterns that don't play out. If you go and throw a range around it, you'll see that, realistically, we got rejected at the point of control, which maybe that was the breakout level for that falling wedge or what have you, blah, blah, blah. Anyways, these ranges are kind of what we get into, right? And then if you're going to consider this the bear market of last year, or 2018, I'm sorry, well, then maybe we are in a bear market, right? In that aspect, it's just not going to be the same. I don't know. Yeah, what I'm trying to get at here, I'm not trying to say the words like, we're in a bear market where we're just going to go down for several years. And also, even just looking back at this, I mean, look at how much action came through here. This downfall obviously was pretty rough. The timing of this was like pretty much a whole year. But what we did have in this time period, which once again, comparing exact price actions is just kind of pointless at this point, in my opinion, right? And don't get me wrong, I was one of those guys for a minute. But you just realize, right? It's not worth it. It doesn't work. It's always wrong. But in this downfall here, this is 2018, by the way, for everybody keeping up here. For the bear market, man, we had some bursts, right? This is on log scale, so this is you had some moves still. You're talking 80% move out of Bitcoin right there. That was within a month or two. 70% move out of Bitcoin, and when these Bitcoin moves came, the altcoins moved really well. So you had some moves, right? What we are experiencing right now is just like sheer just rollovers, right? So it's not the same as what it was by any means. To me, however, right, I just don't think that there's a simple metric to just be like, throw a rainbow chart on here now, and at this point, Plan B, all these things have been proven wrong. So you really just have to go with the flow at the end of the day, right? You can kind of guesstimate certain things, this and that, and kind of build off of it. I know everybody gets really fearful down around 30K, which in my opinion is probably where you should be considering, and I'm not even gonna say that. This is where I would consider selling everything I own and getting into more Bitcoin, right? If we drop down below 30K once again. Obviously, you do your own thing. That's not financial advice by any means. But what I want to bring this all up for, this idea here, is that we ranged it out, bam, 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 we resolved to the upside. What do you see here, right? Another thing I'm going to throw up on the chart real quick, because this is one thing that Magic Internet brought up, right? Is that this right here, this was a blow off top in a sense, right? And then the biggest thing about this, and this was earlier in the year, but the biggest thing that you have to consider is that as we grow in market cap now, right? Like these things aren't going to have this right here was only $800 billion. This right here was, probably $100 billion maybe. So, as small money is in there, it doesn't take much to get us up to these bigger levels, right? So now we're going to be pulling back a little bit. And if you throw a pi cycle top, right, that was something which I don't pay a ton of mind into. Don't get me wrong, but not that you shouldn't. I just didn't give it too much thought, and we didn't have these back in the day. But I gotta say, right, you got you know what I mean? Like you got that pi cycle top indicator coming in right at the high here, and you did have it right here. Which once again kind of identifies just like blow off top scenarios, right, where we just had so much coming in, and we it's interesting. So with that being said, that was almost a year ago at this point, over a year ago, and this time frame, our bear market lasted a year-ish, a couple years, I guess, but whatever. But realistically, like what are we in right now, right? What do we see? We're just straight ranging once again, right? So the idea here is that very possible, right? That I think it's really possible that we're at least going to run it back. Maybe we don't get to the all-time high. Once again, that's something that we'll be judging and monitoring and making moves on along the way. That first real move here is to get back above $47,000. We get back above $47,700 on a closing basis. We're most likely going to run it back to 60K. From here, right, you got our range low, however, which realistically the range in play is not this top to bottom as it is here, right? So and that's based on volume, but for this example, we're gonna do this little idea. The thing that now what happens next here, I guess, like let's just run this little idea still, and once again, pure speculation, just an idea. I'm just trying to answer this whole are we in a bear market question, because I just think that you shouldn't even worry about that, because I don't think that it's going to, when we are, it's not going to look the same, right? It's going to be one of those situations where, coming from me, somebody who went through a bear market back in the day, guess what? I didn't know it was. Nobody knew it was. What we were talking about back then was we were looking. We had Chinese New Year came out, or it doesn't come out. It's every year, obviously. So Chinese New Year came, and that was a reason why the market was crashing, because everybody in China had taking 2 months off or something like that. So then it was April, and then tax time came around. So that's why the next dump came around. And then it was summertime, and you got your summer sell off, and that's why the next dump came around. Well, then it was September, and then you get your September sell off, your quarter three. Like it just was, there was always a reason, right? And everybody was just so like, it's just going to keep going up. I look around us right now, and I kind of feel like we're in a similar position, right? Because it's like every time we turn around, you got a Fed meeting, getting tossed at you. You got this, there's always like a random excuse or a thing that like really freaks everybody out. And it's always, I don't know. When you just kind of zoom out, like focus on what we have in the chart here. And it's a lot more intricate than obviously just being like, we're just gonna, just go up and then we're gonna go down, go up and go down just until it breaks. That is pretty much what I am saying, though, and it's an interesting take, I guess. Don't really see too many people bring it up. Magic Internet Money, definitely all credit to him for really bringing this, through. And like I said, but it's calling anything for months and years out from here. Like it's probably a fool's game, and somebody somewhere is going to be right, and good for them. It wasn't me, right? Like I was looking for the 4-year cycle to come through. It didn't, and then from there I was like, all right, whatever. Well, the previous 2 years before that we killed it, and for 3 months, I got it wrong. But we adjust and we move on. And my idea here is that, we are very likely to run it back here over the next few months. And what does that mean? Because now we have to think about, there is such a thing as, getting a correction to the upside, right? It's not all about just correcting down. So this is one of those deals where the blockchain backer, right? This guy, he's probably the number one dude on advocating this little idea here. Well, he's talking about running it back to whatever, the 702 is his number one deal, which I don't have it on this chart, but it's essentially right here, 58K, 57K. That also just so happens to be the entire year point of control for Bitcoin. So that is a major target regardless. So it's interesting to see how that stacks up. So that will be a major area that you want to pay attention to. We got a couple of order blocks around there as well. I mean, there's a ton of things at 57, in that realm. And if we get that rejection right here, let's just run this idea here. And once again, just tuning out the noise. But let's just pretend we run it back. 57 is where we get that hit. All right. At the end of the day, we know we're in a range. We're in a huge range. It's already been a year. We started this basically right here on December of 2020. So we're in 14 months into an accumulation range right here. Consolidation, sorry. And let's just say we run it up. All examples here, right? Not like putting any eggs in this basket, but once again, we'll be monitor. We have targets all the way up here, right? Like we know what to look for. We know what we're anticipating. Let's say we run it up and we get that drop. Now, the biggest thing to me is if we continue up from here, that $32,000 volume target I brought to your attention earlier, that to me is a big reason why we are probably going to come back down to at least that area. Does it mean we have to do it here? Not necessarily, right? Maybe we do get a blow off top scenario up to 100K. And we get a 80% pullback, and then 32,000 that NPOC that we left is the bottom. Who knows, right? So we'll come back to that. But in general, we start getting rejections right here. Start coming back down, closing below that 47,000, that yearly key level. Start closing below that again, and then we're probably coming back down, cycling all the way back down to the bottom here. And then what will everybody say about this market, right? This will probably, and then put it in perspective, let's just say that this is, through the summer of this year, where you generally get a summer sell-off anyways, right? And this is just an idea, because we could totally break through here, and then, at some point, we're going to break this high. You break through this 69K, I don't really think we're going to stop at 74, where, I know that there's a lot of target going around that at the moment, but whatever, we'll see, of course. But regardless, on the run-ups here out of Bitcoin, the altcoins, everything is going to be exploding, right? On these last two previous runs, you're talking like, there were so many moves out of the altcoins. The market will just be on fire, right? It's just going to be very important to really just pay attention around these two areas, right? It's these two. These range, like I just pointed out earlier, in the current range we're in, this is range low, this is range high. What happens here? Super bullish across the board at resistance. super fearful at the bottom, and realistically the bottom of this range does come in a little higher. These are deviations, but just for example, we'll talk about it like this. But let's just say this is how we play this out for the next couple months. We run it up 57K by May, get a pullback. Everybody's going to say it's the sell in May and walk away, which is generally true. And then once again, thinking about this from an institutional standpoint, why do you think a lot of these ranges and a lot of these time frames line up so well, right? This is January, right? This is middle of the year. Well, this is end of the, it's like they line up perfectly with quarters and all this and all that. So it's institutional run, right? Like that is what it is. We're swimming with the big boys. And they're not out to get our money, which is funny, right? Like that's not really the game. I mean, yeah, we come in and we have some exit liquidity sometimes or this or that, but they're chasing each other's money, right? Like these guys are taking out each other. They don't care about our $1,000 play here. Like they're looking for the millions. But regardless, we're in there. We're trying to make it, right? So this whole idea here is this. Maybe let's say we run it up, right? And this is all, once again, going all back into the same 60 people in here. So I only repeat myself, assuming that maybe somebody just joined. But we're talking about the idea of a bear market. And like I said, I just think it's not even important to think that way, because I don't think this is not going to look the same regardless. This time around, like everything has been different, right? It really is. I know that sounds like so stupid to say, oh, this time is different, but every step of the way, it's been different. So I mean, you kind of have to adjust to that, right? So we don't know what it's going to look like, and there's a lot more like social media attention and this and that, like on bigger aspects, and I do think that plays a role in that, and for where everybody kind of leans towards, and I don't see anybody talking about this. Oh man, iPad's about to die. So so let's just say we get that run up 57K. Blockchain backer is going to look like the damn king. But what's going to happen is that everybody's going to anticipate the rest of his theory is true, right? And his theory from there is that we drop down or whatever. And this is the thing. Realistically, we can go back to let's just say 20K on the board, whatever. I don't believe that, but it's really not what we believe. We're tracking data here and assuming where it's going to go and trying to be with it. There's nothing you and I can do that's going to say like, oh, we ain't going to 20K, right? But that's not what I'm trying to say by any means. But I'm just saying, like, realistically, the area to be paying attention to is this $29,000 window. That's that range low, let's just say, as an example. But what will happen is that we get this rejection, for example, right, at 57, which is that 0.702, which is realistically the point of control for all of 2021. As the highest area of volume traded for 2021, $57,000. Can you believe it? But that doesn't mean everybody's buying there. That's buys and sells, right? That's the transaction of money right there. You can already see what I see here, right? This is where everybody's head's going to be. Is that, oh man, we just made a 15-month, huge Head and Shoulders, whatever. Let's just pretend this has a target. I bet you this is negative. Oh no, it's not negative. Okay. One of these was like negative $8,000 one time when we tried to do it. But regardless, this, right? Just picture that. That's the play I think everybody would be expecting. We run it up 57, 58 if that's the top short term, right? Let's just say in the next couple months here, and this is all just only a 57 is where we get stopped up, because that's there's still, and this is why I say you just have to adjust and go with have a plan for everything along the way, because we could definitely just come through here, break the range high, and take off. My problem being with that is that I think that this would wreck everybody. I truly believe you'd catch this, and reason being is that we have those damn NPOCs down here still, right? And imagine we actually come through and we spike down $27,000, right? $27,000 is actually our golden pocket from the 2020 dump to the 69K high. So at the end of the day, all you'd be doing is basically just getting a full retrace down to the golden pocket, along with a slew of other things, right, that we talk about in the Discord on our members only market updates. But that's one area right there. Imagine how many people would be jacked up thinking we're going to 13K. Look at that target. That's everybody's favorite. That's everybody's favorite target, which is basically the high from 2019's July. Actually, that's 2019's high in general. How many would fall in love with that idea? Just for us to absolutely now. So let's just put a little timeline on this. Also, just an example here, right? Magic Internet Money would kill me if you found out I'm just kidding. Because like I said, this is just sheer speculation. We're just BSing on a Friday. But yeah, imagine we get to that, we pull it back. This is summertime again, right? You get your sell in May, walk away type of situation. Well, now we get down to 27, 28, 29K. I mean, everybody, you see it already. Even when we're at 35, people start sweating. If you put in this, you're putting in this huge Head and Shoulders target down to 13K. Well, what if we actually turn this bad girl around and we run it back, and then by the end of this year, we actually get that breakout towards that blow off top that nobody's expecting, right? Because I think too many are expecting a bear market. Like it's just like it's just almost as equal as people expecting the blow off top last year, right? So that's just a sheer speculative idea. And I'm not saying like the end of this year, like December, right? Like, because we actually have some times leading us all the way into 2023. And my original analysis, which is interesting, granted my target was pretty hefty, but my original analysis for BTC for the end of this run was in, and I have a video on that on TikTok as well. But it was for between August of 2022 and April of 2023. So I know that's like a 6-month window of time. But yeah, we'll see how it all plays out. And once again, that's just one idea. Regardless, we're still ranging in this area no matter what, right? So yeah, to get this run back, I think is very likely. I think that to anticipate just running it straight through is not necessarily the move at the moment. And we have to really pay attention to how things go down around that 57K area. And it's not because it's the 0.702. I guess you could put that in the mix, right? Because that is a major fib level that we do struggle to get above. And if you do get a rejection there, I mean, it does generally lead to a downside. But just think back and remember this video when we when we come through the next couple months. It could look the same, but I agree it will likely be different at some point. New market form. Yeah, I mean, it's I think that over time, we'll get these, time frames where it's like, all right, X money, even like the Dow Jones or the housing cycle. I mean, they have cycles. They're just like 20 years, right? Like my Dow Jones chart, which is why I don't anticipate the stock market to actually be crashing until the end of this. I mean, like pullbacks like we got recently or whatever, just like we're getting pullbacks now. But like Dow Jones, has like 18-year freaking 17 or 18-year cycles, right? And the housing market does as well. And let me zoom out a little bit more on this one. I put a video on this one too. I mean, this is a pretty good one if you guys want to watch, go through that, because it's interesting to note how a lot of these play out. And there's always a black swan event that, is introduced into the mix to really, really, shake out that fear. But this is like, all the way back here, you got these negative phase, positive phase. Each area right here is actually 17 years, right? And this is all the way back to the 30s. So you got a negative phase here. We had a mid-cycle bottom. I don't even know what this. There's a black swan event each and every time. Well, this was the Great Depression, obviously. And I would imagine that around that 100-year mark, so 2029 is maybe when we'll get our real deal big this, right? Like just total markets crash, like housing market, all that stuff. But I think we're going to run it up until about then. You got these going across the board here. Our most recent ones here, in our negative phase here, you had 9/11, right? Had that pop there. Then you had the mid-cycle bottom there, which was the 2008 crash, right? So that's 2008. And we essentially restarted for the housing market back in 2011. We got about an 18-year cycle that started then. Mid-cycle was our 2020 crash, right? And then we pretty much just started that next rip. So for the Dow Jones, I would imagine we're probably going to continue that move to the upside here for quite a while. Like I said, this is actually, I guess it goes into 2033. I don't think, you might not make it all the way till that on a peak base, right? And this is also just an example of just how you can't just, take a fractal and throw it over some other time frame and assume it's going to be the same exact way. But it's interesting to note. All right, today was a different stream, right? We got off on some tangents. I don't necessarily think I don't hate it. It's kind of fun. And that's just what's going on in the old CVO mind, whether it's true, whether it's accurate or not. Like I said, just ideas here. Obviously form your own opinions and do some research and whatever. In that time, Biddy has closed at 4 hour below that monthly key level, so we just might get this 39K again. $2029 is close to my retirement years. Yeah, well, sell your house, man. There's a book. Let me grab it. You guys should read this book or look it up. Secret Life, Real Estate and Banking. Right on the back, this guy's got kind of like the. Let me see if you can see that. It's kind of this situation in the housing market, right? You get basically, a 7-year little uptrend here. You get this pullback. It's 7 to 10 years. It's not like exact, right? So 7 to 10 years, you get a pullback in the market, and it's always instituted by a black swan event. And then you get that second leg up, which is a rip of like another 7 years, and then you get a real blow off. And this is the housing market. Generally can kind of pour over to the stock market as well, but this is the timing for that. Then you get the big crash, and then you get about a 3-year recovery, and then you restart. Well, this started, put this into perspective, for 1993 was the last time this ran up. We ran it up for 7 years. What happened after that? We had a 2001, black swan event, so to speak. About a 6-month drawdown in the housing market, the stock market, and everything. And then from 2001 to 2008, you ran it up, right? 2008 crash, 2 to 3 years, kind of like you had a 1.5 year just downside, and then a 2-year recovery phase. And then 2011, we basically restarted that 18-year cycle. So go back here, 2011, we ran it up, and once again, it's 7 to 10. It's not exactly 7. So 7 to 10 years, what happened? 9 years later, 2020 comes, you get a huge black swan event that made everybody freak out, thinking the stock market and everything was going to go into a Great Depression. We only had about a 6-month downfall. It was a big correction, don't get me wrong, but it was not the end-all, be-all by any means. And then what happens is we're most likely just entered into this second leg up, which could very well lead up into about 2028, 2029. And that's for the housing market, right? So just something to look into, whether it's true or not. Name of the book is The Secret Life of Real Estate and Banking. It's by this guy, Philip Anderson. It's like $10 on whatever, but he's got a ton of things too. He's got like a website, and he's, you can get all kinds of information and stuff from it. It's pretty interesting. Like it, I don't know, just worth a look. Oh, it seems that they're trying. I don't think they're trying. I mean, what could be, I guess. But yeah, no, this is where we're at, right? So, going into the weekend too, right? Which is always a blast. So, especially when you're coming in on a downtrend, because if we get any kind of upward movement over the weekend, then you got to worry about the CME futures gap every time. All right, let's see if we can get this 2-year key level right here live. Like I said too, though, I mean this is enough for me. This is 1.5%. I wouldn't even be getting greedy looking for anybody looking for 40. Probably people are starting to stack in at 4,500. We do have our range low still to be aware of, 38K. But even if we came all the way back down to here, you're still making that higher low on the way up. So we'll see how things go. Realistically, you can't anticipate further upside from this range high, especially until we break that range high. And that's pretty much exactly where we've been the last few weeks. Yeah, not in love with seeing the market coming down right before the weekend, unless we're just going to stay that way over the weekend. Because, like I said, if you get a decent move over the weekend, you always got to worry about that CME futures gap. Not that that's the end-all, be-all either, but they tend to swing it around on Monday. But either way, we got some good opportunities here, right? If you missed this, At the moment, you're talking, this is only a 6% move now from, had you missed the Monday low or whatever, right before we took off, we're only 6%, away from that right now. So definitely a time to be interested here. Oh. All right. Well, I think that's about all the time I got today, guys. I'm going to be putting some new updates in the group here for everybody going into the weekend. And then we've got our members only market update on Sunday. So be sure to stick around for that. We're going to go over everything and anything. We go in a lot more detail on those. And then we also introduced order flow, open interest. We've got Max. He goes over that for about 20, 30 minutes too. So that's pretty interesting. And a lot of people tend to like that. It's a totally different world in that aspect because you're seeing real-time market orders like bought, not the order book where it's just where somebody wants to buy. Order flow and open interest is literally where people are it's already been purchased, right? Money's coming in. You can see it real. So it's pretty interesting. All right. Well, I hope you all have a great day, great weekend. That art guy. Appreciate you guys coming out. Glenn, if you're still in here, buddy, thanks. Mark. We will talk on Monday for sure, and maybe I'll try to squeeze another live stream here or there. If anything crazy happens over the weekend, I'll pop on for sure. You guys have a great one, and until next time, everybody, cheers.